That inflation dragon that used to terrorise the economy has been hibernating for the best part of 20 years, and today's tamer than expected numbers gave the share market a lift. The Australian market resisted the trend in Europe and the United States, where shares fell because investors are worried Europe's debt solution will disappoint. The topic of conversation here for the time being is tame inflation and lower interest rates. Today's inflation numbers helped the banks and retailers. Insurer IAG was up after sticking to its profit guidance at the AGM. Resource stocks were mixed. Fortescue Metals is raising $1.5 billion to fund expansion, and a higher bullion price helped the gold miners. And it's that rising bullion price, which is at a one-month high, that reflects concern about Europe. But back to that inflation number or numbers and the interest rate question. There's more than one way to measure inflation, and that's why we need economists. You'll see at the end of the graph, the well-known consumer price index, the red line, is running higher than the Reserve Bank's preferred measure of inflation. And that shaded area, the 2 to 3% comfort zone, is where the Reserve Bank would prefer all measures to be. So the bank may wait to cut interest rates, particularly since Europe could become more of a problem and it might want to save its ammunition. But expectations of lower interest rates saw the Australian dollar fall across the board below 104 US cents. And that's finance.